edition of Marauders, beating the market one trade at a time. First things first, smash that subscribe button down below, like, comment, share. So today I'll be diving into Morgan Stanley. So Morgan Stanley had a pretty huge move today, and the fact that they're going to be acquiring E-Trade. So if you guys don't know, E-Trade is a trading platform that a lot of people use. Robinhood's another really big one. It's the one that I use. I have a link down below if you guys want to sign up for Robinhood. I'll get a free stock, you get a free stock. But this video is about Morgan Stanley. So if we look at Morgan Stanley, they've been on a pretty good run. Their moving average 50 is 52.72. Their moving average 200 is 45.69. So they are currently at 53.75, and this is going to be on the 20th. So depending on when you watch this video, this price will have changed. This is just today's closing price, so bear that in mind for future videos. So if we go to another one of their charts, we can see that it's been on a pretty big uptrend for a while. Go to their 1 month chart. The 1 month chart shows a bunch of fluctuation, and then it kind of dropped off today after that news. It went down a little bit, but in my personal opinion, I think it's going to go back up, and let me go into my justification for that. So if we go to their press release, let's get into some of the details on their merger or their acquisition of E-Trade. Now, E-Trade is a really huge platform for trading, and I think this merger, in my opinion, was done because of Robinhood. Now, Robinhood and other platforms like it, like Webull and Tastyworks, but there's been a large emergence of a lot of I guess you can say trading platforms that have zero commissions, and more people, more younger people nowadays are getting into trading. Now, if you, being a company like Morgan Stanley, they have a reputation for a lot of older, wealthier people when it comes to investing. Their main source is wealth management. Now, wealth management is not like you come into the place with like $10,000 and you're like, I want to invest this to retire. Wealth management is usually for people who have like millions of dollars, and they want that to continue to grow and find ways to pass it down to their grandchildren, children, large amounts of money in their wealth management, and their clients are very versatile in trying to diversify their portfolios when it comes to their wealth management. On the other hand, you have E-Trade. E-Trade is like, anybody can really jump into it. A lot of young people use it, just like Robinhood. It's easy trading. There's a lot of information that E-Trade gives you. It's kind of a learn as you go type of deal. So this is kind of the clash between old ideals of come in, make an appointment, sit down, come talk about the future of money, opposed to kind of the new way of people investing, which is give me the information, and I'll kind of want to learn on my own sort of thing. But I'll come back to that, and let's jump into what this article says. It says combined platforms will have a 3.1 trillion client asset, 8.2 million retail client relationships and accounts, and a 4.6 million stock plan participants. So combinations increase wealth management scale, fills product and services gap through complementary offerings, and enhances digital capabilities. Positions Morgan Stanley as top player across all three channels: financial advisory, workplace, and self-directed. Next one, significant cost and funding synergies will result in stronger financial performance and shareholder value creation. Combination accelerates Morgan Stanley's transition to a more balance sheet light business mix and more durable source of revenue. So basically, in layman terms, this means they're going to be one of the sole investing companies in the world, really, when it comes to investing with this one move. Now, one thing that I'll have to say, um, in my opinion, is I think from a strategic point of view on just the company Morgan Stanley, I think it was a great move. I think it was a really good chess move to help the longevity of the company. I don't think we're going to directly see, you know, the fruits of this labor, but I think it's a pretty good move. Now, if I was Morgan Stanley, I would try to understand millennial money. Now, what do I mean by millennial money? I mean like the people born in like the 90s, late 80s, 90s, anybody who's a millennial. I would try to understand the mind of those people because those are the people who are beginning to start investing. Those are people who are investing in platforms like Robinhood. Um, and why Robinhood is so successful. And I would try to take a hands-off approach when it comes to that. Um, the average millennial investor, in my opinion, now this may not be you, uh, but I think we don't want to be told what to invest in and how to invest. We kind of want to learn as we go, make our own mistakes along the way, but have the information available to us when we want to learn. So that's why I think, the whole Robinhood aspect was so successful. You're not being punished for making trades, which was the largest, barrier to entry when it came to investing for a lot of younger people. And also, you are able to make those mistakes as you go. Now, I know like a lot of platforms kind of like, oh, what's the point of having a platform when, people are just losing all this money? Well, the goal is not to lose money. The goal is to learn. And if you take that away from investors by telling them what they're going to invest in, and hey, you have to come sit down and talk to, these people, and they know what's best for you. I just don't think that's the future or the way millennials think. I think the way they think is, they want to invest and they want to learn, but they want the information presented to them, not given to them. So, on platforms like Robinhood, there's plenty of information there if you're willing to learn it or if you're willing to take the time to learn it. Um, and, people are very motivated when it comes to that. So, learning on your own is definitely the way to go. And I think the only way for a company as big as Morgan Stanley and, the type of clientele that they have, in order for them to be successful in this merger, I think they need to have sort of a hands-off approach when it comes to E-Trade. In order for them to be successful as well as Morgan Stanley to continue to be successful. Because I think a lot of people are thinking Morgan Stanley's going to come in, they're going to change all policies on E-Trade and they're going to make them, try to be more like Morgan Stanley. But I think, if you can understand the way millennial money works and the way that millennials think, that they want the information presented to them and not forced to them, um, then I think it'll be successful on both ends. So, drop a comment down below. Tell me what you guys think. Would you rather have information presented to you or forced information? I know I'd rather have information presented to me when it comes to investing. Like, let's say I saw some sort of investing like I saw like options. I was discovering options for the first time. Now, what people usually do, they go online, they watch a video on YouTube, they try to figure out what platform that person's using, how they did it, and then they just jump in for themselves and try to learn how to do it. Now, you may be successful when doing that, and you may not be successful with doing that, but the main thing is people learn how to do it on their own. It's not like, You go and you sit down with the financial advisor, and they're saying, this is options, this is how options work. Now give me this amount of money, and I'll go do this for you, and I'll tell you how it worked. I think it's a shift. It's beginning to be a shift in our culture, where people are wanting to be more independent with their money and more hands-on. So I think if Morgan Stanley can um, kind of sit in the corner of E Trade as kind of like the uncle with all the advice if you need it, and let E Trade do its thing, then I think it can be beneficial for both parties. Um, because Morgan Stanley, because they're a wealth management company and they've been so successful at that, they have a lot of knowledge that people would need, but at their own rate. Um, Everyone's not dealing with millions of dollars, so not to say that's the only clientele they have, but if they cater towards that type of people, I think that's what a lot of millennials are seeing. Like, hey, they cater to people who have more money than I have, so how can they really relate to me? Are they gonna try to force feed me the information, or are they gonna just let me, do what I want to do, and then I can come and get information if I want to? But anyway, I think it's a pretty interesting buy for Morgan Stanley, and I think it could yield profitable on both ends. If they just continue not working separately, but if they slowly integrate both companies together, um, I think it'll be very beneficial in the long run. And we could see Morgan Stanley being this global leader when it comes to investing and wealth management. So drop a comment down below. Tell me what you guys think of the merger. Um, Make sure you hit that subscribe button, like, share, and I'll see you guys next time. Peace.